Remember, stock markets are on a 5-day winning run. We are at a 1.5-month high. Nifty is up 6% or about 1,500 points from the recent swing low of 23,263. So major movement in the stock markets, but after the RBI policy meet, we did see some bit of a drawdown in markets. Market reacted sharply. In fact, some of these rate-sensitive sectors like the banking and realty, we saw major cuts over there. But I think some semblance has set in as far as the markets are concerned. We are back in that flattish sort of a zone. Nifty, for that matter, is back above the 24,700 mark. It's hovering around that range as well. The broader markets, and let's talk about Sensex as well, it's closing in on that 81,800. In fact, it's just about 1 point shy of it. Markets are flat. We have recovered from the day's low. Remember, Nifty and Sensex both fell by about 0.3% after the policy decision was announced. But, looking at the broader markets, I think they are pretty much holding the fort. Both mid-cap and the small-cap indices are trading in the positive territory, and with modest gains, that too up by about 0.25% each. Mid-cap 100 as of 10:30 a.m. this morning was up 0.22% at 58,572, and the small-cap index was leading the charge. In fact, it was the best performing segment of the market. It was up 0.24% at 19,379 mark. What investors perhaps would not like is that pickup in India VIX. India VIX was up about 2.3%, but that's also understandable considering that this major event was about to come. So the market was slightly jittery, and remember, more than negative news, what the market does not like is uncertainty. So perhaps that pickup in India VIX makes some bit of a sense. But let's also look at how the sectors are performing out there, because Nifty Bank, remember, had seen a sharp fall after the policy decision was announced. It was down by about 0.5% or so. It has recovered. In fact, it's back in the green. It's up 0.22%. The realty sector, which is again another rate sensitive sector, although it has recovered from the day's low, it was down about 1% or so. We are down currently about 0.5% on realty. So some recovery is being seen across the board. Another sector that is rate sensitive and reacts to whether the RBI does go for that rate cut or not is the auto pack. Remember, for the auto companies and the buyers out there, if RBI does reduce the rates, your EMI becomes cheaper. Obviously, it comes with a lag, but since the EMIs become cheaper and the financing cost becomes cheaper, and especially at a time when we are entering the festive season, the markets can, the investors can perhaps and the buyers can go out and purchase these vehicles. So auto stocks, although they should have reacted negatively, I think because of that reduction in CRR, they are also holding the fort, up 0.4%. But that's for the Indian markets. Let's move on.